Okay, everyone, Leif Soreide here. We got a very special guest for Edges and Insights. Clement Ang is coming to us from Hong Kong. He's in the USIC, the US Investing Championship, this year. It's his second year, actually. He's more than doubled his account in the million plus, the last reporting. He's going to update us if you'd like with whatever he's doing there. I'm very excited to talk to him. I found him on championteamtrading.com, our platform, obviously, but I take no credit for him. He's doing all his own. We're going to go over his background and what kind of edges. So it's not just a story of success. He's gonna try to pass along, and a little bit of passing the torch and all his amazing trading ideas. He's got his best trades, maybe some bad ones, and hopefully you can teach us how to not draw down, how to keep the money and all that. So welcome, Clement. Glad to have you.
Hey, Leif. Hey, everyone. Yeah, it's nice to be here. It's an honor, a pleasure.
Yeah, different time zone. He's just waking up. I'm ready to go to bed. So this is the way we do it from Hong Kong to like Miami area here. So tell us a little bit about your trading background and trading journey. Just to start, when did you start trading?
Yeah, so my stock trading journey began in late 2019. So I was a second year university student at that time. I was majoring in econs and finance. And back then, my mom gave me an initial starting stake of about $200,000. And she asked me to buy my first stock in the Hong Kong equity market. So it was a bank stock called HSBC.
Yeah.
And shortly after I bought it, was when I saw the stock move higher, and I had an unrealized gain, and that got me very, very excited.
Right.
But shortly after that, the bear market hit because of COVID, a very, very sharp one, and my position went from green to red, and I'm like, oh shit, what do I do, right? And so then I decided to hit the books. I bought myself a couple of trading books, stuff on momentum trading, the Market Wizard series, and that's when I kind of sold out, and then luckily I was blessed with a very nice bull market in
Yeah.
2020 and 2021. And so that was when I turned my initial starting stake into what I considered my first pot of gold at that time. And my wife and we decided to start a family. So I wired out a chunk of it, and then whatever I had left was I decided to, play it as house money. And so then 2022 bear market hit. And so I was massively humbled. I was chopping myself down all the way.
Right.
But I never really gave up. I decided to persevere. That was when I kind of stumbled upon, IBD, Trader Lion, and all of you amazing traders on X. And that was when I kind of doubled down a bit and turned my trading around in 2023.
Good.
And then so then in 2024 was when I decided maybe I could, try my hand at the USIC. And so in 2024, I joined the 20K division. And safe to say, I guess for the first part of the year, I did pretty well. I think I believe it was like April or May at one point, I was already up 70%, and I was really excited. But then as the year progressed, I was kind of subconsciously or comparing myself on the leaderboard to the other players on the leaderboard. So things
Right.
like, oh look, I'm up 70%, but this guy, oh, he's up like 300, 400%. How do I get there? So that kind of like put me in a vicious loop of trying to chase for performance rather
Yeah.
than initially wanting to commit to my process and stay accountable and disciplined to myself. And so when the market conditions changed and got more choppy, I was essentially chopping myself all the way down. And that really, really sucked. Um, so, but we were blessed with a pretty good year-end rally in 2024. I kind of
Right.
picked myself up and really decided to stick to the process. And I ended up the year, I think, about 80%. The biggest lesson I've learned that year was to keep my monthly drawdowns small, because the moment you can do that, you're giving yourself a chance to, redeem yourself in a sense when the market turns and you can catch it,
Yeah.
and you're off to equity curve new highs again. So going into 2025, like that was the regret I had. And so I decided to join the competition again in the
Okay.
20K division. And yeah, I had a good year. I felt like things kind of clicked for me this year. I was able to catch most of the, I guess, key points or the key turning points in the market. And then it was when we went towards mid-year, was when Norman asked me if I wanted to upgrade my account to the $1 million division because the account size was big enough. And I said, sure,
Oh,
why
nice.
not?
Okay.
Yeah, so that's how I
I was
ended
gonna
up
say,
in the million dollar.
I thought you were in the million plus. That's an interesting move. So you changed mid-year, and Norm approved this, and which is always good to ask Norm if you're gonna do some kind of a.
It was Norm
Yeah.
that suggested me to do that.
Yeah, I mean, Norm is gonna, get you out there, and everyone's gonna know you after this because your returns are amazing, and you're so young, only 28 years old. And you have a million. It's like that when I was 28 years old, I was trading my first million an account, right? Like so that was I was finally seven figures in that year. So you got a lot of runway ahead of you. So you're gonna do amazing. I'm excited for you, and I'm dying to hear about how you manage your drawdowns and all this stuff. So uh, what else can you tell us about your who you've learned from? And influences so we can sort of credit the style because everybody wants to learn the repeatable style, right? That's sort of
Right.
I guess the point of the contest. Norm was looking for great strategies, and that was you could see on the statements, and you're obviously doing it. So the repeatable thing, maybe it's just over and over again. We're seeing that. That's and who are these influences? Go ahead.
Yeah, so I guess I credit my initial kind of foundation. It was kind of hitting the books, right? So you have your How to Make Money in Stocks by William O'Neill. That gave you the big framework of what to look
Right.
for in, a stock that can make huge moves. And then you kind of dig into a little bit more detail, be more surgical. We have Mark Minervini, where he teaches, trade stocks in stage two uptrends, with the VCPs.
Yes.
And then kind of not forgetting stage analysis, Stan Weinstein.
Hmm.
And yeah, and then so that's kind of like how I initially started, trying to trade on the long side. And then
Right.
that's when I, through Traderline and all the interviews, kind of discovered all of you guys. And I've been
Yeah.
taking bits and pieces of each one of, your styles and kind of incorporating it into my own kind of way of trading.
Right.
Um, and then with regards to the short side, because I kind of was spurred to learn that in the bear market of 2022, was when I read Trade Like an O'Neill Disciple and Short Selling with the O'Neill Disciples by Gil Morales and Chris Catcher.
Yeah,
Um,
that was
and
the year
then,
for shorting, by the way, in the million plus. One of my friends who was on the platform, Samir, won the shorting. Not a huge return, but he won. A win is a win, right? So he was mostly shorting. That was the year to short. So you look at you, you're getting your timing is good to learn that. That was the year to learn that. But go ahead, just wanted to drop that in there.
yeah, the short side, I guess it's a good toolbox to have, but just kind of like, when I'm looking back at my stats, and my overall P&L this year, and kind of segregating it between how much money I made on the long side and
Yeah.
how much money I made on the short side, it's a huge skew. It's like 80% of my profits this year is on the long side. So
Right.
it is a good thing to learn. I think like, some traders, or some folks would come and ask me like, is it really necessary to learn the short side? I guess my answer is it is not entirely necessary. In a bear market, you can always sit in cash. But I think what is important and why, you should kind of at least, I guess still learn it is to kind of differentiate between what is constructive price action and
Yeah.
what is not constructive price action. Constructive price action is when you see things nice and tight,
Yeah.
you know, whereas things that are not so constructive, like say what right now, you see a lot of charts that are wide and loose,
Yes.
a lot of distribution. So yeah, so that was kind of the
I love that
most
answer,
of
by the
my
way.
trading influences.
I love that answer. The why to learn the short side is to help you spot what's going on, what's wrong, what's about to be a short instead of a long, right? I mean, it just helps you learn where to be. So I just love that. So in all those books, and that's really my background as well, right? Weinstein, Minervini, O'Neill's the framework and all the risk management, and then all the little edges like guys like you. Now you're on X and all this, and we're all going to learn from you and see how you did it. So maybe we'll jump into that. You have something you want to share?
Yeah, sure. Let
Okay.
me kind of share my screen.
Okay, so Clement's here and he's going to show us with TradingView some of his trades and edges and insights and sit back and well, don't sit back too far. Lean in, get a pen and paper, take some notes and watch this. Go ahead. So this is Ethereum.
Yeah. So basically what I'm going to do is I've kind of put together some of I'd say one of my best like a couple of my best trades this year.
Okay.
Um these kind of represents, the trades that I feel like had a couple of edges stacked in my favor, which gave me the conviction to kind of size a little bit bigger. So when I mean size a little bit bigger, usually as a default is I would risk between about 0.3% to 0.5% of my equity per trade. And
Okay.
sometimes when I develop larger conviction, I may be more prone to adding or risk a larger percentage. So I'd go up to 1% of my capital. Um, and so these trades represent, some of the better ones so far this year. So Ethereum, this is my biggest trade. And there were a couple of things that kind of caught my attention. So kind of part of my routine and my process is I have like I'd say a macro slash futures watch list that I stare at every day. And so you have, the stock index futures, the dollar index, and so crypto, Bitcoin and Ethereum is one of them.
Right.
And you kind of like in my plans that I share on X, I have a short commentary where I kind of commentate on, how the movement of these things, go every single day, just to kind of keep in touch and keep in tune. Because, sometimes, you kind of see correlations, and when you see a shift in correlations,
Yeah.
that you kind of have a heightened alert that okay, something is going on. So kind of like, the dollar has been going down the whole year. Suddenly we see signs of life, right? What's going on? Is this going to affect anything? Stuff like that. So kind of sorry, I digress. But going back to this, there are a couple of edges that brought Ethereum to my attention. So first of all, Bitcoin has been on a long, long bull run, right? And I guess 2024 was kind of the year to trade Bitcoin. There were many opportunities. And then I was kind of thinking like Ethereum, when is it going to play catch up? Like you hear all this talk about, this whole crypto cycle where Bitcoin goes first and then Ethereum, and then from Ethereum it will flow into the altcoins, things like that. So that was one of the reasons why I paid special attention to it.
Yeah.
The second thing was at this juncture, so this was about in July, was when um, Ethereum started to enter what I'd call an RS phase. So the first thing you'd notice here is the RS line compared to the index has begun to slope up. And so that catches my attention. It's beginning to somewhat outperform. And then secondly, as Ethereum was forming this low cheat, so kind of what it did here was it was trying to trade along and break above the 200-day line, which is in red. It briefly did, but this was a fake breakout, and then it flushed all the way down. But it did not die, right? It showed signs of life again. It reclaimed the moving averages, and then
So
now kind of
shakeout.
pulls back.
You look for a shakeout to up the odds here. We're looking for your relative strength improving into the breakout, and this is a shakeout and a fake breakout. And how long do you wait for a reset typically when you see a fake breakout or a false breakout?
I'm So typically I'm looking at a couple of days to weeks. And then of course I want to see it in the context in relation to the moving averages as well.
Right.
So, the shorter term moving averages usually my guide. So, which is why I had to wait very patiently to kind of reclaim and kind of sit above at least the 10 and the 20 day. Uh,
Yeah. What
right here
averages
in
do you
this
have on
instance,
here? What moving averages are these?
right. So the very light green is the 10-day exponential. The
Okay.
purple is the 20-day
Okay.
exponential. And
Okay.
then the blue and the red is the 50 and 200 simple moving average.
Which one's 200?
The red line up here.
The red line. Okay. So you're willing to play sort of below or around the 200 day.
Yes, for the
Okay.
most part, I'd play
Yeah.
above. I'd like to play
Yeah.
above because stage two stocks and uptrends,
Yeah.
you want it to be above and sorry, you want the 200-day below price and sloping up. But yeah, in kind of special instances when things like this kind of catch my eye, is when I would pay special attention.
Okay.
So Yeah, so kind of, yeah, going back, it kind of squatted and reclaimed, right? And here, when it reclaimed all the moving averages and built this launch pad like setup, it was consolidating into a low cheat. And so you notice as it consolidates, the volume has been drying up.
Yeah.
So that's always a good sign because it represents supply is not coming into the market. And when there's no supply, it doesn't take that much demand to break this thing out. Um, so that's kind of the first thing, the RS phase and the technical setup. The second thing was the group strength. So as Ethereum was setting up in this manner, actually, Bitcoin was doing something similar. It shook out, it reclaimed, and it was also setting up a low cheat just above the breakout point. Um, so you like whenever I look at a setup, you always kind of preach, think beyond just the chart pattern, right? Um,
Right.
you want to see group strength, be it a stock or a commodity. You want things to set up together. It gives you added conviction. And then the third thing was kind of looking at the commitment of traders data. Ethereum it showed large speculators max short. So what happens if Ethereum actually breaks up from here? You'd have people covering their shorts and chasing. So
Right.
you kind of thinking behind this whole chart, like what could drive the price higher. And so kind of putting all that together was when I bought Ethereum via the ETF, the ETHU, which is 2 times leveraged.
Oh, there you go.
Um, and then so I was positioning myself in anticipation that it was going to break out, and that's kind of how I did it. So moving forward was it broke out, it
Mm.
worked, and you could see the volume signature has been picking up. So just kind of briefly explaining volume, I like to look for 5-day and 10-day pocket pivot volume signatures. And so then that was picked up from Trade with the O'Neill Disciples by Gil Morales.
Hmm.
Um, so it's a concept. So in my volume bar here, the dark green is a 5-day pocket pivot. And then this light blue is a 10-day pocket pivot. So you notice that as Ethereum breaks out, you'd see all these volume signatures. It's increasing. And that's good because it's telling me that folks are either covering their shorts in Ethereum or they're accumulating Ethereum. Um, and then so I'm just letting the trade ride while I was following my sell rules. So typically kind of how what my sell rules are is when I get say 2 times the ADR of this, either stock or commodity in question,
Yeah.
in unrealized profits is when I would take my first trim. So for example, say if Ethereum's ADR average daily range is about 5%, the moment I get say 10% in unrealized, I'm taking my first trim and then I'm shifting my stock to my entry to kind of improve my worst case scenario.
I like that. Are you using
So
a 20-day ADR just so everybody can make their own
y
adjustments?
yes, that's the 20-day ADR.
Okay, perfect.
Yep. So that was my first partial right here. And then my second partial happened when Ethereum began to trade about, 8 to 10 times average true range, also the 20-day
Hmm.
from the 50-day moving average. So kind of credit Jeff Sun. He was the one that kind of came up with it, and I've been implementing that into my own trading. And then my last third was when I see closes below the 10-day and the 20-day. And so in this instance, I kind of sold on both instances. So I did half half. Because like at that point of time, it was such a huge profit. Psychologically, I didn't want to give too much back. And so
Yeah.
that was the first trade in Ethereum. And this is not done yet. I actually have a second round. So as Ethereum broke the moving averages on volume, it did not die again. So fake out, and then it reclaimed. And then guess what it did? It went inside one day, it went
Double
inside
inside.
another day.
Nice.
So double inside. It's still in RS phase. The volume's kind of drying up a little bit. And so then essentially I was buying this on weakness. So, the candle did not close like this, right? Like it was pulling back into the 20-day. And then so I was just buying it as close to the 20-day as possible. And then I was using the prior day's low as my stop. And here, I remember that day because Ethereum gave a lot of chances to kind of get positioned in anticipation for that breakout. Um, and then so lo and behold, it breaks out again and we get another move. And so, I was just doing the same. I was selling my partial, but then notice that in this second leg higher, if you look at the volume signatures, the first leg you saw a lot of accumulation, right? But in the second leg, if you look at these dark gray bars, you're starting to see a little bit more distribution, right? The leg is tiring out somewhat.
Mhm.
And so I was reading the price action and kind of scaling more partials, thinking that I don't think it's going to extend as much as I think it would. And then eventually, the moment it closed below the 20-day was when I closed out the remaining position. Uh, and
Okay.
so that kind of represented round two. And there's more. So
Wait, there's more. So sorry.
there's more.
So that's a Ron Popeil thing. I love Ron Popeil. I had dinner with him twice, actually. Passed away since, but great guy. Go ahead.
Oh, that's awesome. Yeah. So second round I closed it, but then notice on the third time it reclaimed again. And so just kind of explaining what I saw in this particular instance. So first of all, you could draw an uptrend line, and you see that Ethereum has kind of respected this uptrend line this whole run so far. So that's one edge. The second thing that I saw was it undercut and it reclaimed the 20-day exponential. So that's the second edge. And the third thing was this horizontal blue line here. If I could scrunch back to the chart, this particular level, 4.1 thousand, 4.1K, was actually a previous resistance level turn support. So it coincided with prior price peaks in the 2021 run, I believe, in Ethereum. And so then you have three reasons why a buyer could potentially step in and push the price of Ethereum higher. And so then I was buying this on weakness again as it reclaimed the 20-day. I was using the prior day low as my stop. And then this day right here was I remember it was I think it was FOMC or Jerome Powell. He was I think it was a symposium or something. It was some event.
He juiced
It was
it.
in mid-August. Yes. And he juiced it. um yeah, so that was great. The only thing
Question.
was
I got a
at that point
question.
of time,
Question for you before you go
right,
back to that. Your entry
right.
there, where are you entering if you're not using the daily? I was, it's a lot of Minervini influences. The daily turns for me. I like to buy the turn over the prior daily high. Are you doing that
Yeah.
as well?
So I'm not exactly doing that.
Okay.
It depends on the type of security or stock that you're trading. So
Okay.
just to kind of give you an example, you could probably, just like the mini Verni turn, you pull back, maybe it
Yeah.
forms an inside day and you're buying that prior day high.
Right.
With say commodities like gold and silver, or even Bitcoin and Ethereum, it's preferable for you to buy on weakness. Um,
So you change your
it's
strategy a
just
little. Do you change it a little bit just for that?
Yes, I change it a little
Okay.
bit just for that.
That's good.
Yeah.
I mean, there's sort of we do this for like energy trading, gold miners. So I like mostly pullbacks. I don't chase gold miners, that kind of stuff. So it's good to have a little switch if it's a different style for the security, right?
Yes, exactly. You
Okay.
kind of have to know the character of it.
Yeah.
And how I knew was I tried buying strength all the time in gold and
Yeah.
in crypto, and I felt the pain. So you kind of have to know the character of what you're trading and adjusting your trading tactics around it. So
Are
how
you
I did it
are you
was
are you doing a lot more pullbacks? Sorry, I know we're gonna get we could do this one chart forever, but I just wanted to ask, are you doing mostly pullbacks then, or would you say most of your buying is on a pullback or a breakout?
I'd say it's pretty 50-50.
Okay.
I can do both. And I would, it all depends on the market environment as well. So if I feel like, I'm looking at stocks that are setting up and I'm seeing breakouts follow through, I'd be much more willing to go and chase a breakout. Whereas if say the market conditions are a little bit choppier, I'd be more inclined to go for a pullback because I won't get faked out in a sense when the stock breaks out and then squats all the way back, and then
Right.
I go from green to red. So I have to kind of interpret what the market environment is and then kind of adjust my entry tactics accordingly.
Okay, so back to, sorry when I interrupted, the Powell juiced it, you sold the partial.
Yes, so I sold the partial. The only thing was I sold too little of a partial. I think it was like 20% of my position.
Okay.
And then that was it. The trade was over. Which was quite a disappointment because I think if you remember, like going into the tail end of August, everyone thought that, the market's gonna rip, right? But we did the complete opposite. Things started to break down and got choppy. So that was it for Ethereum. That was my biggest trade this year.
Okay, great. That's really good. So that was with leverage. So you're getting about doubled because there's probably some time decay in how long did you hold that? I mean, I typically don't hold anything levered over a week, and that means I'm in the money right away. Otherwise, I'll probably cut it.
Yeah, so I think the average duration for this entire trade was about, a couple of weeks.
Okay.
So you notice that by the time I tried to trade a second or third time, the holding period, has decreased significantly. I'm just following the chart and kind of um closing it and trimming it as I need to according to my rules.
Right on. Oh, that's cool. That's a and looking at Bitcoin, that was one of your clues. You got a lot of edges there. RS line leading price. You got a flush,
Mhm.
reset, cheat, meaning very tight, kind of lower pivot, right? I guess we could say that. Uh,
Yeah.
yeah, and then the reset after a false breakout. But you're batting cleanup in a way too. It's sort of not the obvious trade once everybody's shaken out and faked out, right? It's just there's some edge there too, and we kind of know that. It's just sort of hard to to put the less obvious spot, which was what you really took, and that's like a very nice entry. So well done there. Anyway, so
Yeah, thank you, thank you. Yeah, so that was the biggest trade. Another one which is a little bit more traditional. So I
oh,
traded
oh,
Futu.
sorry, the position sizing too. Do you have any standard position sizing on something like this, or I mean, well, there's a whole lot we
Mm,
can do with this, but
yeah.
yeah.
So with regards to position sizing, I position size based on risk.
Okay.
So say for example, 1% equity risk to capital, and then if I'm risking basically the difference between my entry price as well as my stop loss. Um, so with with regards to Ethereum, I think the biggest position size I was able to get in ETHU, I think it went up at one point, it was like 40% of my account.
And
Uh,
levered. So that's how
and levered.
he's juicing it here, guys. This is not
Yes.
right. We use a little leverage once you get there. I wouldn't recommend beginners to it, but the guys that
Yeah.
are hitting it out of the park, that's used. So
Yeah. So kind of a couple of considerations to consider before going that aggressive. So first of all, definitely I tried to get my entry to stop as tight as possible. That's how I was able to
yeah,
do it for, I guess, little risk. But then at the same time, like with where I was at in the competition, at that point of time, I was already up triple digits. So I had my mental headspace was okay to be a little bit more aggressive and kind of step
yeah,
on it a little bit to chase for performance.
okay,
Whereas if say I was single digits for the year or down for the year, then I probably lean on the side of caution and be a little bit less aggressive because I just don't have
yeah,
that much cushion to work with. And
yeah,
psychologically, I wouldn't be able to bring myself to do that either.
yeah. If you're up 100%, you got a big stack to work with. And what would you say your max drawdown off of 100% gain on the year? Where would you cut yourself off and say, I'm just not getting it done. I have to stop.
So ideally, I'd like to keep it within 15% of my equity curve highs. I didn't do a very good job in May when I hit my first 100%. Got excited. Oh shit,
Sure.
like 5 months in, I'm already up 100% psychologically speaking. And then I kind of did that P&L post, which obviously was bad. And then market got choppy and I kind of chopped myself down. So at that point, I went from like 100% down to 70. So that was a 30% equity drawdown off peak, which was bad. And I kind of took June to kind of nurse my wounds a little bit. Market got a little bit choppy as well. And
Yeah,
basically how I kind of deal with the drawdown is I immediately size down. So say, I was doing 0.5% of my equity and I'm just going it down to 0.2%. I'm also kind of reducing my trade frequency as much as possible because I'm just kind of thinking back at the times when I put myself in that situation as well, psychologically. And it's when you kind of get that huge, drawdown from peak, right? And then you're like, oh no, I deserve that, right? And I mean, I deserve that money. I shouldn't have lost it. and so now I need to trade more to get it back. But you know,
Right.
that's counterintuitive because you're going to dig yourself into a bigger and bigger hole.
Yeah.
So the thing to do, and the thing that people should do to kind of reduce that drawdown, is to first of all reduce your trade frequency and size down. It's easier said than done, but you really need to restrain yourself and kind of take a step back and reevaluate the market. Kind of look at your trading, like, was it a market problem? Is it because the market conditions have changed? Like, look at, you know, the reactions to the breakouts, for example. Like, are they squatting, right? Or is it a personal problem? Like, are you kind of, say, for example, maybe looking at the intraday charts a little bit too much to time your entry, and then you're just chopping yourself within the noise, right? Things like that. Those are the,
Yeah.
usually, at least for me, those were the bigger problems that I faced, that I'm kind of aware now. So whenever I see myself begin to draw down from equity curve peak, I would take a step back and reevaluate.
Yeah, that the key is to not draw down. And people, I've heard some big numbers. People get huge, and then they have a lot of drawdown on the bear market. And I've been through a couple. 2008, like I said, it was sort of a I was starting to trade some size, and it was just straight up went into a disaster, right? So that was like
Yeah,
a lot of risk management. You had to be smart with it,
exactly.
not to blow out, right? Um, and I'm 45 now, and we've been risk managing a little better ever since. Every year we just try to get a little better. I mean, it's just the love of the game. I know you love the game. I can tell just from our initial conversation, even before we started. So that's the inspiration everybody's looking for, is these energetic people like yourself. I'm guessing you're going to run a massive fund one day and people can play this back and be like, yeah, I was right. I like to place my bets, right? And I'm sure you'll go that route. You didn't say anything about that, but that's we'll see. We'll see. Yeah, let's go to the next
Sure.
one.
So this is a more traditional type of, I guess, play.
Mhm.
So the Chinese equity markets and the Hong Kong equity markets were actually setting up in June and July after the whole, you know, Liberation Day thing. So the first thing I'd notice with regards to Futu, first of all, I kind of anoint this as the leader within the group because this was the first to set up and break out. So the first thing that I would see when I look at this chart was, so Liberation Day was here, and Futu basically undercut and rallied off this low. So that's the kind of first sign that I would pick up with regards to, okay, this stock potentially has finished the down leg, it's bottoming out, and it wants to set up. And then the second thing was, so it made this whole rally from
Mhm.
April all the way to June, and this
Yeah,
was basically not really playable. It's kind of wide, loose, and choppy.
choppy. Yeah,
But then as it traded up towards the prior price peaks. And so this is a daily chart. So if you flip back to the weekly chart, you'd imagine this is a pretty big base. So
right,
first edge, it's a big weekly base. So what happens when a stock breaks out a big weekly base? It's going to go, and it's going to go big. And then secondly, I'm looking at the daily chart now. First of all, it's kind of pulled back into the moving averages, into the 10 EMA.
nice
And
little
so
drift
here you
there,
go.
like a little handle
It's a
drift.
nice literature.
Yeah,
Exactly. Secondly, the stock is already, you know, beginning to show RS. RS line is sloping up. That's another good sign. It's you know, showing strength against the market. And then kind of looking at the volume now. Again, it's extreme volume dry up. There's no volume at all, right? So the
right.
moment this breaks out is when it's going to go.
So
And
how do you
then at
interpret
the
that?
same
Let me
time,
let me let me stop you there. How do you interpret that drift there, and that's kind of the volume is dry? Like what do you think in your head is going on? Like just so
right.
people understand it, other than just say I'm looking for low volume. Like they want to know what that means. So what does that mean to
Okay.
you? Yeah,
Oh, okay. So when you're looking at price action in conjunction with volume, so Futu kind of drifted lower back into the moving averages, right? So I
right,
guess, you know, when price is drifting lower, you'd imagine, okay, there are sellers that are trying to sell the stock down. So now that's when you pair it with volume, right? You're looking at, oh, but as it drifts lower, it's on lower and lower volume. So it kind of going back to the concept of supply and demand, if the stock is drying up, sorry, drifting down, and there's no volume, it just represents that there's potentially no supply coming to the market in this stock. And
right.
so then when you have a shift in demand and supply, so when there's some demand that comes into Futu, that's going to be the fuel that drives the breakout. Like no one is actually selling the stock at all. they're holding it. So you could kind of interpret it as, okay, the strong hands are holding it. There's no one's going to be easily stopped out of this one. And as traders, we're usually the weak hands, right? We want to get on and join the train ride.
Yeah, yeah. I just want to put some color to that for everybody that just says, I'm looking for low volume. I don't know that a beginner trader would understand what that really, what it could mean. It doesn't necessarily mean it's a sure thing. I mean, I look at it as the sellers are getting out and they're less and less interested in getting out, right? And then you have some maybe better odds. That's like an edge on a turn higher. I mean, that's sort of the way I look at it. And then you have your undercut there. It's also like, anybody has a stop at the low of that base, I mean, they're probably out. So there's a lot of things going for it, and big, like you said. So, and then your next edge. Before I interrupted you, there's just so much to so much to cover. Go ahead.
Yeah. No worries. And so my next edge was there was a potential group move. Like I was flipping through not just, the ADRs listed in the US, so the Chinese ADRs. I was also flipping through all the Hong Kong equities, especially the big charts, like your Babas and your Tencent, things like that. And they were also setting up. So a huge edge and something that traders should prioritize is whenever you look at a chart, don't just look at the setup. You kind of have to think beyond that and put together a big story in your head. The
Think
context.
beyond the
The
pattern. Sorry, I had to say my
think
catchphrase. Think beyond the
sorry,
pattern. I
think
can't
beyond the
resist
pattern. That's right.
because you're doing that. You're doing it. So it's just a way of putting some kind of a point to it. But yeah, go ahead.
Yeah, exactly. So group moves are very, very powerful. And so then when you see that stock should be prioritized in the watch list versus some like random, chart that are setting up that is not really part of a theme or a group. And so it's just kind of moving on quickly. Yeah, so this is the chart of the Hang Seng Index when Futu was setting up. Like you notice, it's also at the top of the range and
Right.
it's kind of on the weekly charts forming a VCP, right? So what
Sure.
happens when the market breaks out? All these Chinese stocks will break out too.
Yeah, yeah. That's the caboose, the M and Can Slim, the market. That's the market for this security specifically. So
Exactly. Yeah. So there we go. Futu broke out, and you notice that as it breaks out, again, it's on volume. So this gives you the conviction to kind of know that, okay, this stock is going to work. So kind of moving on with the trade, I sold my partial on my first third, according to my sell rules. And then it was at this point was when I actually decided to sell even more as it gets extended, and I eventually sold it all. And
mhm.
the reason was, first of all, Futu at this juncture was actually trading at the 2021 price highs. When I think back then it went to like 160 to 190. So it represented, potential resistance or potential supply that could come into the stock. And then secondly was at that point of the market, it was towards the end of July, was when I was looking at other stocks in the US market. I was flipping through my watch list and I noticed that, well, first of all, the queues were getting increasingly extended. And secondly was a lot of the price action that I saw, it got more and more choppy and hostile.
Mhm.
Um, and it was towards the end of July was when I began to, not get too much traction in my trading to end the month. I was getting stopped out of new positions. Things weren't working that well, and so then I made the decision, which was wrong in hindsight, to sell all of Futu because I think ultimately Futu went a lot higher. I think it went to 190 or something.
Yeah, it's the
But
biggest
I
thing that
was
we all struggle with when to sell in the uptrend and the blow offs, and we have a lot right now.
exactly.
I just did PPTA. I sold 50%. I could have sold for 70% the next day, but then it dropped right back to 50 almost, so like maybe 60. Like so it makes your head spin, but you can only do it, make your best guess. I mean, that's all we're doing, right?
Exactly, exactly. And so then I sold Futu. I sold all of it. First of all, to kind of finance some of the losses, the new losses I took by a little bit, which is kind of managing my risk in my equity curve. And then at the same time, I was just trying to follow my own trading, right? If I'm not trading well, even though the market's good, no reason to be pushing it until I find myself, kind of in tune or connected with the market again. So that was Futu. It was a big win, given this kind of move. So I was pretty happy with this trade.
Okay, cool. Yeah, there's a lot to take from that. What's the main insight here?
For me, the bigger learning lesson is to again try and ride your winners for as long as possible. So
Ah,
while I made that decision to sell it prematurely, kind of looking back, had I held even a small piece and I rode it all the way to 180, 190, that would actually finance more of any new losses that I took, right? So the decision to sell everything in hindsight was short-sighted, and it's something I'm trying to work on as well, is to hold my winners longer, even though I see myself taking a bit of heat on new positions.
right.
And actually that has helped, especially in this run in September, to cushion my equity curve drawdown much better. So say historically, when my equity curve drawdowns from peak, it's like 20, 30%, but sticking to my winners and holding on to it allowed me to give it more cushion, because those
Yeah.
those stocks would just continue to work. And so then with September this time, my equity curve drawdown was at 15%, which is exactly what I wanted. Um,
Right. So a lot of times we're selling because we're drawing down on other positions, so we're sort of balancing. And this is what in real time you're holding that, but maybe you have three other positions that are lousy, right? And then you got to kind of make up for it by selling that into strength. So that's the problem we have. Balancing that is tough. I mean, you want to let one work, and then the three that are bad, right? That's where we all go, oh, we shouldn't have sold, and then there's a Powell comes in and juices it after we thought we were going straight down like that, or a Trump tweet kills us or something. So, but yeah, but then you sold something you shouldn't have. That's kind of the thing. Especially, I see a lot of traders are a little too affected by the news lately. How much do you look
mm,
at the news, by the way, and how does that affect your decisions? Are you starting off the day with news? I mean, I know you're looking more at the price action. That's the most important thing. But
yes.
what kind of news feeds are you looking at? I mean, just out of curiosity.
Yeah, so you're definitely right. Price action always comes first. I typically don't really look at the news, but I do kind of keep an eye on it from time to time. And the reason why I want to keep an eye on it is to be aware of, this whole concept of news failure that, Jason Shapiro likes to talk about. So say, for example, like a piece of positive news comes out to the market, right? Your expectation is that market should rip.
Right.
So going back to the Jerome Powell example, it did rip, but
Yeah.
then shortly after, there was no follow through. So it gives me an indication of kind of positioning at that point of time, probably. And when you get an expectation breaker like that, it's like you could treat it as like a warning sign, or it could be a potential turning point. So that's kind of how I use news in my process. But for the most part, I don't look at it. Even stuff like seasonality. The past few months, I think it was what, July, August, and September. Everyone said it was going to be a seasonally bearish month.
They're
But then
very
what do we
bad.
see?
Yeah.
We saw, yeah, I mean, aside from some chop in between, you saw
Yeah.
stocks setting up. So what do? You follow it, right? And then you just discard whatever seasonality is out
Yeah.
of your head, and then just hammer the stocks hard, when they're setting up good setups, everything clicks, and
Yeah.
it's go time, right?
I try to,
So
what you're saying, I try to put this in a note, a morning note, something about a lot of good setups, plus, bad news equals, nobody wants to buy it. No, plus nobody wants to buy it equals success. Like that's sort of been where I've been making the most money in the last couple of years. It's like all the traders are, 100% cash a meter. I'm sure, I sort of say that means everybody's
yeah,
out touting, 100% cash is a smart thing to do. And sometimes it is. And I'm not saying I don't go to cash, but once you see that and then the stock set up again, nobody wants them. I think that's an edge. What do you think about that?
I think it's an edge. Kind
Okay.
of, like there's always the saying that trading is a very lonely journey. Um, there's one of the reasons is probably this, right? Like
Yeah.
you kind of want to think individualistically in a sense.
Right.
You don't always want to be part of a crowd, because when everyone is standing on one side of the boat, um, the risk reward probably favors the other side of the boat when you're standing alone. So it kind of sounds harsh, but like that's just kind of the truth. When everyone is scared or everyone thinks the same way, then someone isn't thinking right. And so then you have to kind of, through your own process, take all the facts at hand, which is price and volume, and kind of piece together a story that makes sense. Always trust the price action on the chart. That will save you many, many more times than, sticking to a bias and staying with the herd it's just not really the way to go.
How do you determine maybe everybody's out of the market, but how do you determine when to get in? Are you looking for, hey, it's a one stock setting up? You're looking for a lot setting up. I mean, that's the thing I'm
Right.
trying to figure out. What do you look for? Like I said, I'm looking for nobody wants them, and everybody's out. But guess what? They're all setting up. It's not just I'm fading the idea, right? I'm waiting for the setups, and those are the ones. That's what draws me in. What do you think about that? Like, how do you get drawn back
Okay.
in? Yeah.
Okay, I see. Okay, that's a good question. So kind of, I think April of this year is a very, very good example to kind of highlight this.
Mhm.
So, Liberation Day happened early April. Um, and basically the market had already been going down in March, right? So kind of the Qs double topped on the 20th of February, and then you saw all the stocks break down, the Mag 7 break down, they all triggered like short sale entries. And then come Liberation Day, Trump tanked the market, right? We saw like gap down and then gap down again. And I distinctly remember this because I was in Macau over the weekend. And I was just scrolling through my social media feed, and everyone was so scared. Like you could literally feel the fear coming out of your screen. Like everyone said, oh, we're going to go into 1920, late 1920 depression. Oh, it's over. This market is done for. So you could feel the fear. That's usually a first tell. And then the second thing when you look at the charts, so the Qs back then were trading below all the key moving averages, but there were stocks that were technically stronger than the Qs. So you have your Palantir, you have your Robinhood, maybe your CrowdStrike or your Netflix. They were all somewhat diverging from the market. So as the market was making a lower low, those were either, undercut and rallying, forming a double bottomish pattern, or it was forming a higher low. So that's your first clue to kind of think, okay, the street or everyone is extremely fearful. They just want to sell everything that they have in their portfolio, but you see stocks kind of diverging away. And so
Right.
then coming out of that bear market, you have your first batch of leaders, right? So then you're keying in on these stocks where no one wants it anymore, and you're looking for a setup to get in. And so that's kind of how I think about looking at crowd mentality and putting that into a story with what is happening in the market at that time.
Okay, very good. A lot of insights there. We'll so move on to the next one, see what else we can learn from you.
Oh yeah. So I think this was a very, very recent trade. Gold.
Hmm.
So this
Oh yeah, that's where I bought it too.
um
That's a good spot. Yeah.
exactly. So it's a big, big weekly base. Again, I can't emphasize enough. Bigger the base, higher in space, really. It's one thing I've noticed, and should be prioritized rather than some extended weekly chart, and then you see a little daily setup. You want to have the time frames aligned in your favor. So when you have a weekly chart set up in conjunction with a daily chart setup, it
Yeah.
makes it much more explosive. Um, so there's that with gold. And then the other thing was it has a narrative and theme, right? So you have the US debt problem, you have the whole de-dollarization movement, and you have like global central banks buying gold now. So that represents a lot of demand, and we've seen the price of how gold has moved in 2024 already.
Mhm.
Um, and so kind of looking at gold, um, I noticed that it has begun to show RS again to the market, particularly in this leg here as it sets up. And then at the same time, when I look at volume, you start to see volume signatures. So I see 5-day pocket pivot volume signatures, which basically is kind of when the the security in question has an update, and that volume is greater than the volume from the previous 5 days. And then similarly for a 10-day pocket pivot volume signature, like that volume is greater than the volume from the last 10 days. To me, that represents accumulation. And so then, given the size of this weekly base and how gold has kind of very subtly made higher lows, I bought that first pullback into the moving averages. And then given the conviction, I added on the breakout. So then I had a
Yeah,
pretty
talk to me
sizable
about that.
position.
Yeah, talk to me about the add-on because I bought the same day you did, maybe over the prior high, and I don't think I was in the money, maybe even right away, but I went really heavy there. I've probably more trouble adding, so I'd rather go all in right away. Like, how much do you
Mm,
add once you get that? Maybe you're already a risk multiple out there. I
mm.
don't know what you risk there, but something like that. What are you adding, and how do you think about that?
Right. So whenever I do ads, I try not to add more than 50% of my original position. So say if I have 1,000 shares in gold,
Yeah.
I won't add more than 500 shares. The reason is I've done so in the past where I buy something and then when it breaks out and I just double the position, but that kind of pulls my average cost up too high. And a
Yeah.
huge mistake I've made was the moment that thing maybe squats or puts in a first natural reaction or a pullback, I won't have the psychological capacity to hold on to it. And then I end up chickening out of my position at break even, and then I watch it rip. And so then, it's a mistake which induces a lot more FOMO and tilt, which is the goal that everyone should avoid, FOMO and tilt, right? So you want to put yourself in a position where you can stay in the game and stay locked in. So whenever I make my ads, I try not to add too much, more than 50% of the original position. And
Yeah.
then yeah, if it works, then I let it go. And so then gold did go for a run.
Gotcha. So you made your big mistake selling it all. It's sort of in that range. I think I sold for the platform, but I sort of noted it's not doing anything wrong. Just going to make some room for other trades. I did keep a bunch of it, but it's like yeah, it's moving so slow. We had to move on to the momentum
The
stuff.
Momo
Yeah,
stocks.
yeah,
Yeah.
right. I mean, I think I was only up 10% or something there, right? It doesn't even look, what I don't even know how much the gain that was. What was that gain about there?
Yeah. It was like 8 to 10%.
Yeah,
It
so
wasn't that impressive.
right. So like hymns today, I made 13%, and I think just hitting the buy button and walking away, right? I mean, we're sort of that was kind of the point I was trying to make. Uh, anyway, go ahead. But it was a mistake in which reason? What's the main reason you think it was a mistake?
It was the same reason where the market pulled back and I was taking a little bit of heat.
Yeah.
And so kind of mind you, like in the middle to late part of September, I was almost fully on margin and out of buying power. So I was pretty heavy long, not just gold, but a lot of the momentum stocks that were breaking out. And so then my first pullback was when I was thinking, okay, I need to preserve capital.
Yeah.
I tried to buy Oracle after that gap up. I chopped myself up and I was taking bigger than expected loss. Like I was just sizing it too much when the market was pulling back and that didn't feel good. And so then I decided to sell this along with NBIS for profits to kind of finance those losses, which
Yeah.
was again a mistake. So it's kind of like a recurring thing that I notice. And in my trade reviews, I try to make note of that and avoid going forward.
Yeah.
But yeah, it does happen when you begin to take heat. It's just a matter of you have to remind yourself if it's doing nothing wrong, you stick to it. Because it's going to pay for your mistakes if
Well,
it continues to go higher.
you're also in the contest, so probably feeling a little more pressure to flip in and out, right? You got to compound. You can say, okay, now I have more money. I got to go buy another one to get that right. Then you're compounding. So that's kind of what you're doing with the time constraint. Would you feel like that kind of
Yeah.
makes you flip in and out a little more because you're in the contest?
Not really.
Oh, okay.
Um, yeah. So like just so in 2024, I definitely did feel that way. Kind
Okay.
of chasing returns
Yeah.
and trying to look for a setup that can give me that
Right.
can push my performance higher and higher. And it was a big mistake because subconsciously you put yourself in a position where you begin to compare and you begin to stray away from process, right? And so then
Right.
right now, if my process is telling me I need to cut my winners as fast as possible
Yeah.
and ride my winners for as long as I can, Just also just kind of like, yes, I'm in the contest, but to me, like winning doesn't matter. What matters is I make money and I follow my process, and
Yeah.
those contest numbers is proof that I can do it, and it's verified returns. So um,
Yeah.
coming into 2025, that was my mindset. Like I was just okay. Early on the year, it was market correction, choppy market, so more, and then starting out the year, start more conservative, right? Slowly chip my way higher. And as I begin to build that buffer is when I am giving myself the green light to pursue superior returns, right? And gas it. And then of course, like kind of focusing on myself because trading is very personal, right? Like say for example, Martin in the contest, he makes 1,000%. It doesn't matter to me because I have to follow my journey and try to get myself to a point where I can also achieve 1,000%. Like knowing that he can do that,
Yeah.
it's not helpful for me. And just kind of tuning out the noise, focus on yourself and your process. That's when you see the results.
I love that. And that's just
And
a message to other people who want to be in the contest. Like put up good numbers. Don't worry about winning. You don't have to win, right? That's the other thing. A great return with a maybe proven system or whatever someone's trading. Will help you reach your goals of doing a fund or whatever it is. And for me, it's just more reaching out and getting involved with the other traders that take the phone call now and stuff, right? And showing that I can actually do it. So people are, when I first started out, as oh sure you're a trader. As people don't understand what that is. So it's just putting that up a decent return is gonna change it for everybody that's in there. So that's why I like the contest a lot, and I try to help promote it where I can. It's a good thing for people.
100%. Oh, and I'm going to digress a little bit for a minute or two, but I also just kind of want to kind of shout out a couple of people from the contest.
Sure.
I think another big benefit of joining this contest is kind of like, I guess, the networking aspect to
Oh
it.
yeah,
In a sense that you get to connect with all these amazing, amazing traders, right? So kind of Christian Flanders, he to me like he represented a little bit of a turning point in my trading too because he was the one when I met him he advised me to kind of keep my monthly drawdowns in check. If my month over month equity curve drawdown doesn't exceed more than 5% and I
yeah,
keep slashing it if I'm not trading well, I just need one good period to make it all back.
okay.
So like all these little bits and nuggets I get from having the privilege of speaking to all these amazing traders kind of sped up my learning curve. So yeah, I'm
Yeah.
really appreciative of
Think
the
about it. I mean,
contest as well as X.
yeah, Christian, he was on CTT, and I think he's coming down where I'm at in November. Probably get to meet him. I'm meeting, we mentioned Jason Shapiro. I love his, fading everybody and all that, the crowded stuff. Mike Webster, and then their conference, I got to go there. So it's great. Just, you can always, there's always room to learn and get better, right? And put a face to a name get out of the trading bubble and get out there a little bit. So it's great that you're doing that and sharing this. That's the thing. The guys that do well, they kind of owe it to everybody else to say, risk management. Here's how we do it. Right. That's a lot of people want to be like you. Go in the contest and win, but it's all kind of picks and ideas and that's not you at all, right? I mean, that's you're showing how you manage risk and you don't expect to win on every trade.
Yeah, 100%,
Yeah,
100%. Yeah.
right.
Oh, sorry, I have one last thing to point out in this gold chart.
Yeah,
Is group strength. So while I'm looking at the gold chart, I'm also looking at the gold miners, AEM, KGC, GFI, NEM. They
right.
were all kind of setting up and showing strength as well. So it gives you
Yeah,
another clue that, okay, this is the time for gold to break out.
yeah. Like Bitcoin leading Ethereum when you made that trade, very, very smart. It's always good to have some clues there.
Exactly. Yes. Okay, so I'm just gonna pivot a bit away from the U.S. markets and commodities. So this is something from my home market. I'm not sure if you've heard of the whole Labubu craze.
No, Pop Mart. I know this. The U2 tour in the '90s was a Pop Mart tour. This is all I know about this one.
All right, I'll send you some details later. But
Okay.
so basically, this Labubu doll, you could kind
Yeah.
of think of it as Tulip Mania or Beanie Babies.
Build,
It
build a
became
bear.
a huge,
Yeah,
huge thing. Exactly.
something like that.
And
Yeah. Okay.
Yes, and for this chart, prior to trading it, it went from $20 all the way to 100 already. And so then, people will ask why. It's just a toy, right? And then so when you look at the financials, you could actually see the year-on-year revenue growth is accelerating 36%. And then as of the latest one, it was 200%. And then, 44% profit year-on-year growth all the way to 400%. So you could see the fundamentals were there, right? Like, yes, it's a
Very good.
craze, but folks are buying it. So, kind of how to make money in stocks. What is a true market leader? This is the one staring at your face, right? This stock um, ran up even though the whole Hong Kong market remained choppy, right? So there's persistent buying demand for this, and the fundamentals are a reason why. Institutions were clearly accumulating it. I was speaking with my friends who work in a hedge fund. They're like, "Oh yeah, we've been buying this, but we don't even know why, but we just have to buy it."
I
Things
love
like
that.
that. It was pretty funny, but it gave me kind of a tell that okay, got to pay attention to this.
Right.
Um, and then so the other thing was back in February and March of this year was when the US market had topped out as well. So there was basically no setups to trade on the long side. But in February and March, the Hong Kong equity market had a good run. Um, so like, stuff like Baba had a good run before it flagged and break down. And Pop Mart was the true market leader at that time. So then I turned my attention to trading the Hong Kong equity markets. So first of all, the strong fundamentals was a huge edge. Secondly was it again, it's been showing RS the whole time. And right here, I was just trying to find a way in. So it kind of rallied. So it's been trading above the 50-day, the whole entire run. It rallied, it pulled back sideways, and it put an inside day here. And very subtle, but it was on low volume as well. So no supply
Right.
was really coming to the market. It was sitting above the 20-day, put in an inside day. It was a very, very standard. The moment it breaks high of day, I'm buy stopping it with my stop at the low of day.
Would you
And so
call this
then
I just want to say, would you call this like maybe a cup and high handle, right? Sort of like the start of the year is the cup, and then this thing kind of made this high handle that drifted off.
yes, yes, I would say that. So like the cup right here
Yeah.
and then the high handle. Yeah.
Right.
So it clearly showed a lot of strength. As the US markets were topping and I guess going into a bear market, but then even amongst the stocks in the Hong Kong equity market, this was the strongest. So that was why I decided to pick this. Um, so when so I bought the high of day. It came back a little bit, but then it was a good reaction. And then I sold my partial right here for a little bit of profit. And then, so then again, like you see this recurring mistake for myself, I sold it all right here. Why? Because I was losing traction in trading the Hong Kong equity market.
Yeah.
The market conditions were getting increasingly hostile. And this was towards the end of March, right? Right before Liberation Day. So I made the sell and I kind of regretted it because it came a lot higher. And
Yeah.
then Liberation Day came and I was like, not too bad, right? Not too bad.
Yeah.
Yeah,
And
so this was Pop Mart. This was a small win, but it didn't end there.
you rebought higher, which is a lot of egos won't do that. Is that right? Is that what I'm looking at here?
Yes,
Yeah.
yes.
Okay. Yeah.
So this was Liberation Day, and then
Right.
going forward, it rallied, and again, it decided to go sideways again,
Right.
and kind of put in a consolidation. So I did rebuy higher, and this time I was pretty aggressive with this one because this was in May, and the reason why I was more aggressive on this was starting out uh, end of April was when the US markets bottomed. We've begun to see our first batch of leaders start to run. In terms of the news flow, Trump had decided to tackle, and that caused gaps higher
Mm.
in the market. And this continued to set up very well and create new highs, right? So it pulled back to the 10-day EMA, and then so then I was actually timing this entry on an intraday chart. I was trying to buy the undercut and rally of the moving average. And then it continued to set up sideways. I was building a lot of traction en route to my 100% gain in May. And so I added 50% more to this. And then on the actual breakout, which also coincided with a $200 Livermore Century mark.
Yeah.
So
Two
that's
Livermore.
another
I love
edge to
it.
think about.
Yeah.
I added. And so then that was a pretty decent trade. So I sold my first partial.
Okay.
And then remember I told you about my whole ego thing, right? Like hitting 100% P&L posting and things like that.
Yeah.
So on this down day here was when I decided to close the entire position. And obviously this was a mistake again. Just kind of taking heat again, getting too excited with triple digit gains, and
Mm.
um, you know, the chart did nothing wrong. And so then this is a recurring mistake that I need to fix next year. It
I like
did,
that. I like the self-analysis. It's good to see, right? A lot of people that would that have your return think they know it all. I love that you're trying to improve. That's great.
yeah, I mean, like, it's trading. You can never know it all. There's
Right.
always a lot of room for
Exactly.
improvement, and
Right.
the market will always humble you when you least expect it. So just kind of
Yeah.
like, keep, like Kobe Bryant, he likes to say, never too high, never too low.
Yeah,
Stay
exactly.
even. Yeah. So, yeah. So kind of going back to the chart, like I sold all of it right here, and it ran up even more. So I missed, like, I think about, it was another additional 30 points on what was a pretty big position.
Mm.
Um, my sell should have been right here, right? Like, let's say if I'm trailing the 10-day, a violation of the 10-day would be my sell.
Okay.
Um, yeah, but it luckily it did not end there. So Pop Mart built an even bigger base. So again, bigger the base, higher in space. I think this base was
Yeah.
about 8 to 10 weeks long, or 6 to 10 weeks long. So it briefly topped in June, and I remember seeing it kind of drift lower right towards the 50-day moving average. And it briefly tried to break. So again, the whole concept of shakeout. It broke 3 bar break, and then it reclaimed. And that had my attention because if you look at the weekly chart of Pop Mart, it was a 10-week moving average buy. Um, and so the moment it reclaimed, I was buying it on the opening range high. So kind of imagining on an intraday chart on a 5-minute candle, I'm buying the first high, like the breach of the high of the first 5-minute candle, and my stop was at the low of day. And so
Okay.
that's what I did with Pop Mart. And then I sold my partial here just because of the price structure of this chart. Just kind of looking left, you see a prior price peak. It represents some sort of resistance. I was
Yeah.
selling a partial right there, and
Yeah.
then I
Most
was
most people might
evaluating it on the pullback.
they might add there. I
Yeah,
mean, a lot of times I'm taking a scale into the breakouts if we cheat low enough, right? Because a lot of times it's they double top or make a handle, and it's not that easy just shooting out, right? So you can always add back on the pullback, right?
exactly.
Yeah.
Yeah. So like to your point, Leif, like it's kind of like useful to think of where has this thing come from. So it 3 bar breakdown, and then it rips 4 days higher.
Sure.
Is it going to actually break out, or would the probabilities favor a handle a lot more? And so
Right.
then my thinking was, okay, I'm scaling a partial.
Mhm.
Let me see how it handles out.
And how much
And
is a
indeed,
partial? Just to clarify, how much is a partial for you? I don't know if it's in general or just on this one, or what can you tell us about maybe how much is a
uh, in general, a partial for me is about a third of the position, 33%. In this case, I was selling half of it
okay.
because of the way that it ripped higher, and I was pretty confident at that time, kind of reading the chart, it should
Okay.
handle out. So I was okay with just
Yeah.
having half,
Okay.
and it did. So like it's set up an inside day here, just above the 10 EMA, and so then I was
Yeah.
adding 30% of my position back. And then there was earnings, right? And kind of knowing the whole story about Labubu, the whole craze, how it's expanding internationally, and the sales and the earnings was going to be the sales and earnings growth was going to be extremely strong. I had the conviction to add after earnings. So the thing with Hong Kong equities is like sometimes they report earnings midday. So in our time zone here is like 12 p.m. or 1 p.m. So it announced it, and the stock intraday went sideways for a bit, and then it ripped. So it gave me a very easy way to kind of add on that breakout. And so I added and put myself back to full position on this breakout.
Yeah, that's
Um,
for me, that's the earnings pivot. I would buy that inside day high takeout because that's basically a a breakout in the earnings, so I find them meaningful as an edge, right? Like if your move is on earnings, that's a pretty good reason to move, right? If the earnings are good. So how do you feel about that? What do you look for on earnings? Do you read the reports? Do you just look for a beat and raise, or what do you look for?
So I'd look for beat and raise, that's for sure. And then I also want to see the sales and earnings growth, you know.
Right.
Ideally high double digit. The best is triple digit, which in this case was that was the case. And so then I had no reason to believe that you know, this could fail. And what's the worst case scenario if it does fail is I just get stopped out at break even or for a tiny nick, right?
Yeah.
So you know, risk management again comes into play here. But the moment I saw that intraday breakout on volume was when I had the conviction, okay, this was going to work. And so I bought back my full position.
Okay, very nice. Yeah, good. Yeah, I mean, I might have
Yeah.
bought your pullback buy. I'd be buying the next day, and then the earnings pivot.
Yes.
That's
Off the high of day, right?
yeah. The next day I'd buy that the daily high turn, and then on earnings I'd buy the inside day high break on earnings. So that's
Right.
it's you're right there doing it a little different. So it's just it's cool to see exactly what you're doing. You have anything to intraday to show that? I mean, I'd love to see like what are you looking at intraday.
Yes.
Okay. All right. So intraday charts here. Let's take a look.
Yeah. So this was a 5 minute chart. With my 5 minute charts, I like to have the intraday VWAP. I like to have a MACD on. So this was something I kind of picked up from Gil Morales
Hmm.
in terms of how he times his shorts intraday. And then so then I was just bringing forward the idea and thinking like, oh, if I could time a short or time a turn intraday, why don't I time it on the on the long side as well? So that's kind of how I ended up here like this. And so then you see like Pop Mart opens right here. It moves higher. So technically I could do a 5 minute opening range high. So it you know it rips higher again right into that prior resistance that you'd see on that daily chart
Hmm.
right at this level.
Yeah.
It pulls back. And so then the first thing I'd see, okay, it pulls back into intraday VWAP. The second thing was in terms of the MACD, like it crossed, right? And a very small nuance is it didn't just cross, it also crossed above the zero line, which is an indication that, you know, there is momentum building up
Hmm.
intraday. So you see like this is like upward sloping, right? From negative to zero. And then the third thing, just looking at the price action, right, pulls back and then it comes and retests this prior price peak again. And this time it rips on volume. So that was all systems go because then you see this constant accumulation the whole day.
Right. Right. Okay. Great. Yeah. That's a nice little. Your intraday look there is interesting for sure. So.
Yes. Yeah. So that's yeah, that was the breakout day. And so basically with this base, just kind of being a mini technician, I measured the length of the base
Mhm.
from top to bottom, and then I projected it higher. So it was about a 20% move, which is where I targeted a partial. Um, and so then I did take my partial here, and I kind of top ticked it, which is pretty nice.
So how
Um,
deep was that base? You measured it. So was it 20% deep
Yes.
when you're?
So
Yeah.
from the price peak in June all the way down to the bottom of the base,
Yeah.
it was about 20% deep, and then from the top of the base projecting upwards another 20%. I arrived at around 340. So again, like the whole Livermore 300 level comes into play here, right? Another edge. And then you know how a stock runs up really quickly, you know, Anaconda Steel, I think 200 240.
I think
And
you
that
were
was kind of the idea.
100 to 113 is in a jiffy. That's the
Oh,
quote from his book.
yeah, right. I got the details wrong. Sorry.
That's all right. That's all right. Hey, the Livermore, there's the big importance of big round numbers. And I guess it's a 13% pop is what he expected in Jiffy on Anaconda Steel going through 100. So around
Yeah.
13%,
So
give or take.
yeah. Yeah. So this was where I scaled my partial, and then a break of the 10 day, another one, and then I was fully out when it violated the 20 day.
Very good. Yeah. Okay.
So another stock in the Hong Kong equity market. This a more recent example. So this is a CATL, which is China's biggest lithium battery manufacturer. So again, first of all, big base. So it IPO'd in the Hong Kong equity market this year, and it's dual listed. So there's one other stock, same stock in the Chinese equity markets. And so then the moment it IPO, it created this, IPO base, and it ripped higher really quickly.
Yeah.
I guess you can consider this a low tide flag because it wasn't a 100% move.
Right.
And then it pulled back and began to base and live above the 20-day moving average. And so when I was looking at this chart, this 6-week flag, it reminded me of ALAB right here.
Mm.
So ALAB, I remember because I was looking at X and social media, a lot of traders tried to buy this whole consolidation, and of course, they were chopped up buying this in strength, right? And then eventually, as traders get very frustrated, they give up on the stock, and then some catalyst comes out, it gaps up, and makes a 100% move. They're not in it, and I'm one of the traders that aren't in that did not catch this move in ALAB, even though I was watching it. Fortunately,
Okay.
I did not get chopped out because I didn't even buy it at all. But this move in ALAB reminded me of this. It reminded me when I looked at this chart in of CATL.
Yeah, you've
So
seen a lot of traders get chopped out and then they're going to stop trying it. And then maybe the real buyers are there. And that's what's holding it up at some point. That's sort of how I look for shakeouts and sort of impossible or difficult handles and bases.
exactly, yes. And so that was one of the things. It was a big base. The second kind of edge that I saw was, so in September, Tesla was also setting up. And so, when Tesla goes on a run, I would kind of associate, okay, all these lithium, battery makers, the lithium battery theme, these stocks would run too, as part of like the EV kind of theme. And so then when I saw Tesla setting up, and I got into Tesla as well in September, was when I thought that, okay, this flag should be rounding out soon. And when it breaks out, it's going to be explosive. Um, in addition to that, just kind of this being a Hong Kong or China equity, I was also looking at other stocks in the group. So Baba, broke out on, I think it was earnings or some sort of catalyst. There were other stocks that were setting up as well. And so that gave me the conviction that, okay, there is potentially a group move underway. Um, so looking at the chart, you could see that it's extremely, extremely choppy, right? Like you see there's a breakout here and then it's squatted all the way back. Those who try to buy in anticipation, or like those who have their stops at the 20-day line, would have gotten stopped out. And so then I was buying this on weakness, just knowing the character of this choppy stock. And so then I bought the first opening range high on the 5-minute chart in CATL, and it broke out on a 10-day pocket vivid volume signature. So notice that again, like I kind of emphasize RS phase, like the stock has to show RS to the market to tell you that, this is the one that you should be buying.
Yeah, even though it's a little choppy there, it's besting the market. That's what you're saying.
Yes.
Good, good,
Yes.
good
Yeah.
edge. I like that.
Yeah, and so then you could see it worked out. It did take quite a bit of time. My timing wasn't completely on point, but the moment it broke out, it didn't do anything wrong, stayed above my cost, and then finally it ripped, and I sold my first partial here.
Mhm.
Oh, sorry, and then it kept going higher, and I guess like part of a trader's growth, right? Like you kind of recognize your mistakes, selling too early, whatnot, and then you kind of review your trades and you get better and better. So I felt I was pretty happy with this trade. I sold my first partial here. As it continued to trade higher, I sold another partial. I think this was at about 7 times extension, ATR extension from the 50-day.
Okay.
But I continued to hold on to a core position, and it ripped even higher. And this time it went up to 10 times ATR extension. And so then I had to sell a partial here.
Mhm.
And then with whatever I had left, I was thinking, okay, I have to trail the 10-day moving average. And eventually I did. The moment it violated the the 10-day, I sold it all.
Right.
And another reason why I sold it all is because all the other Hong Kong or China equities were selling off at the same time. So it was a definite distribution day. And so following my sell rules, I got out of it.
Good. Okay. Yeah. And the 10-day moving average, I use the ADMA a lot. I mean, why do you go with the 10 simple moving? In case anyone's wondering, any thoughts on that?
In terms of moving averages, there's no kind of right or wrong answer. So my answer to that would be a moving average is just a visual guide for you to look at the trend on a short term, medium term, long term basis. Whichever period moving average you use doesn't really matter as long as it works for you. So you kind of have to make the magic happen for you with those moving averages. And so then for me, my comfort level was, I like to use the 10 and 20. And so then I've stuck to it for a long time.
Good. Okay. Yeah. And that's really what I think too. It's you get used to the moving average and how it acts around that. It takes some practice. If you just switch, if I switched you right away, it would take some getting used to, I think, right?
Yeah, I'd probably chop myself up a lot more with the 8.
Yeah. Yeah. Exactly. That's a faster one. So,
I've
oh,
got more.
okay.
So,
Great. Great. We love it. We love it.
so this is a semiconductor stock. So, like
Okay.
the semis in the US were running very hot. And so this was back in July, along with Futu, as the Hong Kong equity market was setting up. Again, this was a big, big weekly base. The stock began to show relative strength. In terms of the price action on the daily chart, it kind of so taking some terms from Oliver Kell, it popped up the 10 and 20 EMA, so it was a wedge pop,
Hmm.
and then it crossed back into the moving averages, and then after that, it began to base and create a very classic low cheat, and so then I'm buying it off the prior day high on this breakout
Okay.
and my stop is at the low of day. So very, very
Very
standard
tight.
kind of rules.
Mhm.
And then at the same time, in terms of group strength, I noticed that its peer was also setting up at the same time. So that gave me the added conviction that this could be a potential group move underway.
I love that. That's thinking
Um,
beyond the pattern, everybody. You're not just buying he's not buying just the pattern.
exactly.
Yeah.
The context matters. You gotta
Exactly.
kind of paint a picture or story in your head to stack those odds in your favor, is what I would think.
Right on. Exactly.
Yeah. Yeah. So this was a stock that I kind of traded in and out a little bit more. I scaled my first partial here. It kind of consolidated a bit, but I think it was a negative reaction to earnings, and so I sold it on a violation of 20-day. But I didn't give up on it because the market was setting up, and honestly, the moment it broke, the 20-day and the reclaim, I felt like, okay, this is not doing anything wrong. It looks like it's in character, right? And so I was stalking it for an entry. And then the second time it violated the 20-day, I was watching it for a moving average undercut and rally. So again, I think I have a daily chart here. This was what I saw. So, it started the session open higher, and then it began to kind of consolidate and base, and it never truly broke the 49 level. So it's never really violated the lows. And then at the same time, as this consolidates intraday, again, volume continues to dry up, which represents a lack of supply coming into the market. At the same time, the whole MACD was kind of snake dancing and going towards the zero line again. And the moment it crossed, that was kind of my hint, like, okay, this could be going for a run. Um, and then I bought it on that breakout on intraday with my stop at the low of day. So when you kind of look back to the daily chart, it kind of represents the moment it broke out. It was a moving average undercut and rally. So that's how I would buy pullbacks. Um, other than the standard, Minervini 2-step, 3-step
Yeah.
pullback buy
So you're
tactic.
using the kind of the Gil Morales 5-minute chart on the pullback intraday more so than the daily high.
Yes.
Okay. Yeah. No, I do look a little the 5-minute chart. That's what I'll kind of look for intraday. So it's interesting. Maybe people want to put that in there and look that up if you haven't seen
Yes.
it. Yeah, he has some interesting stuff for sure.
Yes. And so that was my buy, and then I sold my partial here because it went straight up for 3 days. And then I was kind of evaluating on the pullback, thinking that it should, at least touch the 10-day or the 20-day. So it pulled back, and then the second day it began to stall. So when I see upper wicks like this, I get rather cautious. And then this time period was towards the end of August as well. So kind of going back to the whole Jerome Powell rip the markets thing, and then things started to pull back and didn't work well. So my headspace was thinking, okay, like things aren't working too well, and so I booked my entire position in this.
Gotcha. Yeah.
Where was I? Right here. So we were right here. I sold it all, and I regretted it because it ripped again. But then I got my third chance. So it pulled back, and notice that as it holds above the 20-day, it begins to put, these like little inside days.
Yeah.
I tried buying this over that prior day high, but then it dojied and wicked out. So I was stopped out of this. But then again, mid-September, right? At this point, the markets were picking up momentum, stocks were breaking out. So I remained persistent, and then the next day I tried it again, and I bought it over the opening range high on the 5-minute chart, and this was when I got a good run. So it began to work along with its sister stock. They all broke out and they went on crazy runs. Sold my first partial here, and then my second partial at about 8 to 10 ATRs from the 50-day. And then eventually on this day, which was the same day I sold CATL, that was the distribution day. So I booked my entire position.
Okay. Yeah, that's a good one. Yeah, the pullback right on top is support, tight turn, and then you're using 5-minute charts. A little different than what I do, but I think you did the daily turn though, correct on that one? The
Yes,
initial
I did
buy.
it.
Okay. Okay. Yeah.
Yeah, those were a couple of examples that kind of highlighted some of my edges, the stuff that I look at to kind of form that narrative picture in my head that, okay, this stock has higher odds of breaking out. And of course, managing risk along the way, like that's kind of how I got I guess, my results this year. So far, I'm up, I think, 225% year to date.
Oh wow.
Um,
I saw the contest that had you maybe 100%. So you did even better.
Oh no no. So backstory. So the
Yeah.
when I promoted to the $1 million division, my returns essentially prorate. So instead of
They have to divide the by a million or something. There's a formula. It escapes me.
yeah,
Yeah, I never did it.
exactly. So they divided by $1 million, and so then
Okay.
on the contest leadership board, my returns would look lower. But in reality, I'm up 225% this year so
Hey,
far.
great job. Very, very excited for you. Clement Ang, everybody. Thanks so much. Any parting words or words of wisdom for young traders out there looking to become the next Clement Ang?
Well, first of all, thank you for your time, Leif.
Sure, absolutely.
I I
Thank
think,
you.
oh no, no, my pleasure. The thing is like um I would say I'm very far away from, the perfect version of trader I envision myself to be. A lot of times along this whole journey, even this year, I've made countless mistakes, which, I feel like an idiot all the time, looking back and like, oh, why did I do this? But I think, the key to making sure that, you can perform consistently is to always remind yourself of this is the long game, right?
Yeah.
When I first started trading, I thought I want to get rich quick, and this seems easy. I can make money, a lot of money in a jiffy, right? But that's very, very wrong. And I realized that, through all the mistakes that I've made in the past. So the first thing I would say, play the long game, think long term, but manage risk all the time, short term. The second thing I would say is, everyone can do what I do. It's possible. When I started my trading journey, kind of looking up to all of you guys, looking at the folks on the leaderboard in the USIC, I always thought that, maybe that could be me one day. But I have to put in the work. I have to work hard. And times will get dark. You would face moments when you think it's the end of the world, and you want to give up, but don't give up, and make sure you have a very, very strong why as to why you're pursuing this. And for me, it was you know not wanting to let my family down, my wife and my kid, and also kind of wanting to provide a much better life for them, along with, of course, having a big passion for the markets. That kind of spurred me on and pushed me to become better, to kind of to achieve what I can achieve today. Like, just never give up. And the last thing, of course, again, I want to shout out to all of the traders on X, you included, the Trader Line YouTube channel. I guess you guys are a huge part of my journey. And the third thing I want to point out is, go and stand on the shoulder of giants, right? Even just looking at the books, Jesse Livermore, a lot of this stuff has happened in the past. It's not new. And so then you just gotta, put in the work. You guys have laid out the foundation, kind of shortcutting and speeding up my learning curve. And so I'm very, very grateful for that. And so then my advice to everyone is to stand on the shoulder of giants, learn from you guys, ask questions, or even if you don't ask questions, be a silent observer, and be very, very meticulous and detail oriented in studying how you guys do it. I think that's what I would say to the audience.
Yeah, easy to do if you love the game, right?
Yeah, exactly.
There we go. Clement Ang, thank you so much. Thanks for your time. We're going to put this out there. People are going to love this. Hopefully we'll do this again soon, and hopefully everybody learned something. There's a lot of stuff in there, and his journey is awesome. Great story too. So thanks so much, Clement. Appreciate it.
I appreciate it, Leif.